Good morning, everybody. Today is Wednesday, February 26, 2020, and I would like to talk to you about the current market situation and what you should do. Years ago, around 20 years ago, I was actually living in New York, and I worked for Salomon Brothers, which is an investment bank that actually trades in the stock market quite actively. It's been since I worked there. It was bought several times, and now this bank is just part of another large corporation. I think it's Citigroup. So the interesting thing is that Michael Bloomberg also worked in Salomon Brothers himself as a trader, and I think he even oversaw equities department where a lot of trades were happening. But because of some acquisitions or some kind of mergers, his position was eliminated, and in fact he was let go from Salomon Brothers. But because he had such a high position in the company, he was given a $10 million severance package, meaning that, basically he left the company with a check for $10 million to do whatever he wanted with it. And what he did was he founded with some people a company which is basically has his name. I think it's like Bloomberg Information Systems or something like this. Now it's just called Bloomberg LLC. And the ideas for this company actually came from from Salomon Brothers trading experience, because when you trade, it's really hard to analyze all the data that's coming from the market manually in the people's heads. And obviously it's also time consuming and inefficient. Try to put this data into some kind of Excel spreadsheet and try to create a report and look at this report and analyze it again manually with a little bit of help from let's say Excel. So Bloomberg created what they call the Bloomberg Terminal, which was basically a computer that was harvesting a lot of data from the stock market, and then analyzed this data and presented to traders in much more understandable and logical way, so that traders could come up with I guess quick conclusions, or what is the risks of entering certain positions in the market, if they should buy, sell, or hold something. So it was really helping people to think and actually come up with profitable trading strategies. When I was working in Salomon Brothers, I actually was writing software for the trading floor, or for basically for the traders, that helped people to again do the analysis of the stock market and make some trades. So, and I kind of have the inside knowledge of how the systems work. Obviously over the years the systems were evolved and developed more, and now they probably analyze a lot more data, but the basic logic there is still kind of like the same. What happens is that we're trying to find the positions that are basically trading lower than they should have been, and what is the fair value is. And then as soon as we, for example, bought this position, after analyzing it and coming with a high probability for this position to grow in the future in value, then we basically analyze the market and try to see if the position achieved its let's say fair value or good value, and it should be unloaded so the sell order could be executed. So now, if we go in the perspective of the coronavirus, what happens is that coronavirus does affect people probably quite a bit more than it affects computers. After all, computers cannot be infected by coronavirus, and they don't have that fear for their life like humans do. So if a person, for example, is feeling upset about the news that are being broadcasted on TV or radio or internet, and some people think, oh, it's the end of the world and we're all gonna die, so why even like bother with the stock market? Let's just cash out and spend all my cash or whatever. I'm just making up this kind of like thinking logic, but the bottom line is that the computers that do trade the market, they even though they probably now look at some statistics that comes about coronavirus, about the number of people that are infected, that are dead, or that got infected, still they try to analyze the patterns, they try to analyze the price movements, and it looks like after 2 days of major sell-offs, the risk factor of entering new positions is quite low, because we already lost so much value. So everything became kind of cheap compared to normal valuations that we had for a lot of securities for this whole year and for the last year. So, and fundamentally, these companies didn't really change much. Maybe they will suffer some sales, especially for consumer electronics, like Apple, for example, is experiencing. But most of the normal, regular businesses and companies, they're still doing business as usual, especially if we're investing in American stock market and American companies, because a lot of American companies do business mostly in America. And we know that right now, at least, we don't have that panic, we don't have that craziness that's being affecting the Asian markets, or even some Europe, like Italy, for example. So it looks like the computers are analyzing the market, and they're pushing the buy button, because the stock market is cheap now. At least short term, it's very cheap, and the trades that are arriving to the market, a lot of them are buy orders. So, and that's why we see that the stock market is recovering now, and I don't think you should miss this situation and participate in the recovery of the market by placing buy orders for some blue chip stocks. If you would like to know which stocks to buy right now, when we have this slow but I think pretty sure recovery, please go to the website 2stx.com. It will take you to the Apple App Store, where you could download, install, and run an app on your iPhone, iPad, and Apple TV. And this app covers 5,000 stocks, and it will tell you which ones to buy. The app is being updated with daily buy and sell recommendations by very sophisticated artificial intelligence software that employs machine learning, similar to the systems that trade the stocks for the big banks. Thank you for your time, and good luck trading.